Hello, traders. I'm sure many of you have read the book Technical Analysis of Stock Trends by Robert Edwards and John Magee. Now, many of you wouldn't have noticed the foreword in that book, which refers to a book called Technical Analysis and Stock Market Profits by Richard W. Schaubacher. So I decided to read that book, Technical Analysis of Stock Market Profits. It is very difficult to source it. I paid some unrealistic price on Amazon to get it. What Schaubacher presents, technical analysis, is completely different. And he presents it as an organized subject, and he comprehensively lays out patterns, formation, trends, support, resistance areas, and associated supporting technical details. He presents factors that can be confidently relied upon and gives equal attention to the blemishes and weakness that turn up to the best of any forecasters. Factors which investors would do well to absorb and apply when undertaking the fascinating game of price, time, and volume analysis. So it's a classic book. I think it was written in 1932 or something, if I'm not wrong. It's amazing that the book written in 1932 the principles are still working in 2025. So I'll give an example. I will not say which stock it is, as it would be a violation of some SEBI rules. So this is a stock. One of the things that Schaubacher states in his book is, if we have a pattern like this, whose boundaries have been tested multiple times, then the best time to enter such a trade is when the breakout is happening. So yesterday, the stock broke out. What is the characteristic about this stock is it was happening at the highest yearly volumes. So intraday volume shockers, you have a free scans available. I use one of them in charting, and this was coming up. So one look, and you can see that it is a multi-month rectangle, almost 3 months, right? 3 months rectangle, and it is breaking out with high volume. So the least risk is not buying after this, but right now when the breakout is happening. And such stocks, such breakouts, never tend to pull back to the breakout area, is what Walker mentions in this book. So enter where the breakout is happening. I can see why he's saying that now, because if you see this, the target is just a few 100 points away. Where it could have been, but if you're waiting for a pullback or something, it's probably not going to be a good trade if it pulls back from here to here now. It's more than, so this is a 50% of a candle height. So if it pulls back to around 25% of the candle height, that's never a good sign. That might be a trade failure. So more likely, this is going to hit the target before any kind of pullback. So great concept. I thought I'd share it. I learned something new from this book, and I could see direct application as well. So if you like this video, please do like and subscribe for more such educational video. I have not mentioned the name of the stock or anything. It's not an investment recommendation. It's just trading knowledge. Bye-bye.